Krista Raymer, nice to see you early on this Thursday morning.
Love to see you, Jay.
Last week we did not talk because I think you were traveling, but I think you were also in Chicago at
Yes.
Benzinga. I saw
Yeah.
you there the year before, I think.
Yeah.
Any vibe shift between 2024 and 2025 Benzinga in Chicago?
I mean, I think like how team members are showing up is a little bit different. Last year, maybe there was some conversations around larger acquisitions and groups still kind of expanding. Not to say that groups are still not trying to expand, but I think that there's a different level of focus around that expansion in the conversations that I was like picking up and being able to focus regionally. What I think when we were thinking about expansion maybe 2 years ago is more markets, more revenue. But the reality is that a lot of complexity comes with every new market that you add, especially if those markets don't operate similarly. And so, definitely conversations around where are there regional players, what do those regional players look like today, what historically maybe some of the companies in their expansion have looked like, and then who is looking to expand right now.
Interesting, because I think there was even news earlier this week or late last week about Connecticut and the market there. And we shared some insights from Lit Alerts about brands that are selling, brands that are not selling, but more importantly, there were some MSOs either winding down or closing shop in Connecticut. I think it's a really tough market to operate in, but also one that if it's your fifth market that you're operating in, maybe the fifth one isn't the one you want to expand into. But like sort of what you're saying, like is this, I guess the other question sort of along with it, is it a sign of like, oh my goodness, the industry's failing, which I don't think it is, or is it more the industry's now in a focus mode, right? Like find out how your business operates, let's hone it, let's get really good at it, and let's get going in the markets we are. Like, is it dire or is it smart strategy?
I think it's kind of both. It's a mix. I think we probably, as an industry, 2 or 3 years ago, when we had to sign leases, we probably committed to some locations that we didn't fully understand the viability of. And like, if that opportunity was positioned in front of you today, would you make the same call? Probably not. In normal retail, if we were to like get outside of the industry, there is always kind of this ebb and flow of where are we creating new and organic growth through new stores, where are we seeing same store growth, and also where are we editing down our portfolio because it just isn't viable for us anymore. And like, for example, Sephora is always kind of like thinking through where they are adding locations, editing locations, what they're doing to test. And so this is a normal thing to take a look at number of store count. I think we had historically always been expecting companies to just add more stores, add more stores, add more stores. But the reality is that sometimes you can do more with less stores. And so store count is kind of like a vanity metric when we get into thinking more from a retail lens.
Yeah. I mean, we talked about it when it happened, but here in Toronto, where I live, downtown Toronto, Starbucks opened a ton of shops and then gave it a year, 18 months, and then started closing as many as they opened, really because they wanted to hone, and this was post-COVID, they wanted to hone where they were going, where they were growing, and wanted to test new markets, and they obviously had the ability to do it. It didn't mean Starbucks was failing. It meant they were testing new markets and were going to optimize their operations in downtown Toronto.
Yeah, and like the consumer behavior shifted after COVID. We've seen the same thing in the industry to some extent. We've also seen, pricing compression hit different markets. What was maybe once a really valuable location because everywhere around it had not opted in. Now everywhere around that location maybe has opted in, and now there's an increase in competition. We're going to see this continue to evolve. So definitely, I think like making decisions based off of being able to be the only operator in a space, you have to understand what the time horizon and risk associated with that is. And so because we made a lot of decisions based off of that as companies, like there is going to be room for those locations to be closing. I think that's okay. Like sometimes you open a location knowing that you can capitalize on that location for a period of time until XYZ happened, and maybe it doesn't make sense within the portfolio anymore.
Yeah, we've gone through that cycle here, certainly in Ontario, in Alberta. We've seen that sort of, I wouldn't even call it boom and bust, but boom, and then whether because of good strategy or dire circumstances, sort of a right sizing of an industry, and that happens in every market. It's happened in Missouri and Michigan and Massachusetts. I mean, it does happen.
Yeah, and like what might be a viable location for one group isn't viable
Right.
for another. And so right now we're seeing locations trade from operators of different sizes. And that could be partially because there needs to be more regional focus to be able to address these stores. I think what people have kind of learned is that cannabis and building a retail location is also a little bit about how you can build community relationships and build an engaged customer base. And so there's a level of regionality to that needs to be part of, I think, the strategy in a way that I have a hard time. I wish that I had written it down in terms of how we felt about regionality like 3 years ago, but I'm not sure that level and how that conversation is showing up today, specifically like Benzinga last week showed up in the same way 3 years ago.
Yeah. It's interesting. In my neighborhood in Toronto, we have so many dispensaries, legal and otherwise, and cannabis and otherwise too, I should say. We had a dispensary that was they owned the building and they were operating a dispensary. That one closed down and a fancy restaurant's moving in. So like they're not saying cannabis, not cannabis. They're saying who is the best tenant? Is it us or is it someone else? So a place that had a license that they rented, they sold the license. Now a new dispensary's opened up with that license in that location. You can't paint so broad a brush with what's happening either on my block or in a region because so many things change.
Yeah, I mean, lease structures have also changed a lot. What landlords are willing to accept in some markets today versus what they were 4 years ago has changed. So there's a lot. There's also people who signed leases that maybe don't make sense within the economics of operating as a cannabis business. And so maybe it's not that the location isn't completely viable, but it's not viable within the economic constraints to which it has been committed to. And so there's a little bit of that too. But ultimately, this comes down to like, how do we understand what the TAM of a market is? How do you build out your own concepts of whether there is a viable location? For like the last 100 years, traditional retail has been building teams that figure that out. And to think that we understood that in the last 4 years is probably unreasonable. So where do we go from here? And like, that's part of my job now in working with the team is understanding like, what do we do to understand if this location is viable? Is it going to continue to be viable? As well as where are there potentially new and organic opportunities that are popping up? And what we would look at and assess today is quite different than what we would have looked at and assessed on 4 or 5 years ago.
And that's why you're in charge of strategy.
That is why we're working with strategy for sure.
I like it, Krista. I'm going to let you go. I appreciate your time this morning and most Thursdays as we talk shop with you. So thanks for making time.
Thanks for having me, Jay.
You got it.